Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Priya Kundamal. She's the CEO of DTCC Data Repository in Asia. We're here to discuss regulatory mandates that will be impacting firms in Asia in the coming year. It is great to have you with us, Priya. Welcome to TradeTalks.
Thank you. Thank you, Jill.
Yeah, you got it. And there's going to be a number of regulatory mandates that are impacting firms in Asia in the coming year. Can you talk to us about which mandates are top of mind for firms today?
Absolutely. There are two areas that come top of mind. One is the T+1 settlement cycle in the US, and second is the global trade reporting rules rewrites. Let me take a pause and explain. On 28 May 2024, firms transacting in US securities, such as equities, corporate and municipal bonds, will need to meet the T+1 settlement cycle, which is a accelerated cycle from today, which is T+2. And what does that mean for Asia Pacific firms? That means they will need to process, match, and settle in less than 24 hours. That is the challenge for the Asia Pacific firms that they need to meet to. And what does that mean for them? They need to look at operational readiness. They need to look at their technology stack to ensure that they can meet that compliance date in 2024. The second point I made about the global trade reporting rules rewrites. What's happening is Asia Pacific firms like Japan, Australia, even here in Singapore, the MES, they have been going through a series of regulatory harmonization on their OTC derivatives trade reporting rules. And this is great news, but it's also a lot of work to get industry ready for it. And what is really good to see is all of these regulators across the line in 2024 and beyond, which leads to, again, greater harmonization, better transparency for regulators to have a better view of systemically, where we process about 17.9 billion messages annually through these licensed, locally registered trade repository. We are meeting that challenge by modernizing our trade repository, doing huge innovation to help support industry to meet this regulatory mandate. So
with less than a year before T+1, how can firms properly prepare for that? Sounds like a big undertaking.
Yeah, I mean, just going back to my earlier point, it is definitely a compression of the timeline from a T+ to T+1. So one thing that firms should look is their operational processes. So, you know, their manual processes, their out-of-date technology may not be effective any longer to meet this T+1 compressed timelines. And what does that mean? Also, T+1 affects a lot of post-trade functions. So firms should use this opportunity to take a review of, you know, their operational workflows, their processing, to see whether they can be ready. And, you know, what is good to hear is, you know, there are consultants, there are industry best practices for firms to follow through, but Asia Pacific firms should really rise up to this challenge because, you know, when you think about Forex and how, you know, local markets in Asia, one size does not fit all. So there is real challenges for Asia Pacific firms to meet that T+1 cycle. So you know, I cannot emphasize, Jill, and I cannot say it loud enough, the time is now for firms to start thinking about readiness and start preparing.
Right, well, of course, they have the regulatory rewrites as well, right? So what are the key considerations for in-scope firms in Asia, and how are you engaging with them?
Oh yeah, this is a great question. It's very near and dear to my heart. Let me just, before getting down to the engagement, what is the scale of change from a, you know, OTC trade reporting changes? So as I mentioned earlier, there's a lot of harmonization, there's a lot of benefits for the industry, for the regulators as well, a better view into systemic managing systemic risk. So they're all harmonizing, they're all standardizing, but that means there's a lot of work involved, because what are the changes coming up? There are changes in Asia. You know, for the first time we'll be doing event and action type reporting, margin reporting, and also a standardization to the ISO 222 XML message formats. And this is not just impacting one jurisdiction, it's a global change over the next 1 year in 2024. So what does that mean? With that benefit from a harmonization and a better view of managing systemic risk, there's also a lot of work involved for the industry. Cost, the burden to review and really scope out what the changes mean for the firms, because again, one size doesn't fit all. The change could impact firms in a different way. Even though global regulators are harmonizing, there are also jurisdictional differences that exist between what's being required across Asia, across US and Europe. So again, a lot of testing and a lot of over preparation. I cannot say that. And just coming back to that point or the question you asked me, how are we helping the community? And this is really important. So for us in DTCC, we play a pivotal role engaging with the regulators here, MAS in particular, also with industry groups like ISDA, IMAS, the Retail Funds Forum Group. I mean, you name it, and we are also plugged in into a lot of industry working groups. I told you about the ISO subsec changes. So working with the ISO team to really be very effective and help drive that process on implementation. So that community, building that community, that conduit, we see ourselves really driving that forward together with these groups.
And besides supporting the industry on regulatory aspects, you're also champion for women in the financial sector. Do you have anything to share with our women that are out there today who are pursuing careers in fintech?
Great question.
It's a great question.
Yeah,
I love asking it.
Yeah, no, and you know what? It is so important. Firms in fintech are looking at diversity, equity, and inclusion as a key way of framing thinking, but also as a key way of also attracting talent and retaining talent in this crunch economy, right? For resources.
All industries are competitive. They all need tech talent.
Exactly.
Right.
Exactly. And women talent, that diversity. And so for us in DTCC, DEI is a front and center for us. We've launched a number of programs. Let me talk to you about our Advanced Women's Leaders Program, which is like an 18-month program that we roll out for women leaders going to the next level, next rung, and so that they don't get stuck or plateaued out in their levels. So that's something that gets nominated by their management teams, and we put a lot of rigor and focus to it, and it's actually paid off dividends, where we've seen women take that challenge and really rise up into the leadership roles. From an industry perspective, we've also been very successful in this group called Women in Financial Markets in the US and in Europe. Bear with me here. In the beginning, it was called Women in Derivatives, but we've actually changed and broadened.
Right? Yeah, it listed derivatives, yeah.
Yes, wind. But we've actually broadened the scope and term. Now it's expanded to the capital markets, to fintech, and I'm happy to say, for anyone listening to me here, I would like for more people in Asia to rise up to the challenge, work with us, partner with us to use these platforms that worked well overseas. And we want to launch, and we're starting to launch this in Singapore for fintech leaders today, to groom them, to get them to their next leadership position. So, reach out anytime. I'm on LinkedIn, and I'm happy to share some of this industry work that we are doing.
All right, sounds great. We appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.